This is what I'm going to call our easy three-step Forex trading system. Step 1. Use our currency meter to find the strongest currencies to buy and the weakest currencies to sell. Most traders trade one currency or two, and some days they're trending and they do well, other days they're choppy and they lose money. There's usually one currency or sometimes three or four that are trending when the rest of the market seems dead and it's going up, down, up, down, up, down. Virtually impossible for you to make money trading. So use our currency meter. I recommend the new one, which is a sortable, build your own trend currency meter, which uses these charts that are on hidden layers. They link to blank charts, which are placeholders. You can see this is symbol number 1. The second one's 2, 3, 4, and so forth. And then you can use the quote sheet to rank these from strongest to weakest or weakest to strongest. As you can see, the Swiss is the strongest, goes into position number 1, then the Euro, then the Australian, and the weakest ones are dollar, CAD, and yen. So looking at this, you should be looking to buy the Euro dollar, Euro CAD, Euro yen. If you like trading the Australian, you should be buying the Australian dollar, Australian CAD, Australian yen. If you want to trade the Swiss, you should be selling the dollar Swiss. You should also be buying the Swiss yen. So those are the currencies that you focus on. That's step 1. Identify the ones that are most trending. Now, the currency meter shows a histogram on top. This is made up of 5 of our best tools we've invented over the last 6 years. 3 of the 5 measure the direction. In other words, what percentage, using the 3 different statistical tools we use, each of them is completely different. So some of them might have 80% of them going up on one currency using one particular stat, and another one might have 70%. They use different methods and different time frames. So they measure the percentage. If you ever see this pegged out at 100%, it means the Swiss is going up versus 100% of other currencies. That's what this power index right here shows. It uses a 60-minute data, 20-period moving average, what percentage of currencies are going up or down, or are above or below their hourly moving average. The Swiss, 100% of them are going up and they're above their hourly. The yen pairs, 100% of them are down. That's a directional tool. And 2 of the 5 tools measure the intensity. It's not good enough to know that 100% of currencies are going up or going down. They could be going up or going down at a snail's pace. They could be crawling slowly up or down. You don't want to trade during those times. It's a total waste of your time. It's boring, causes you to take boredom trades, and most of those boredom trades will lose you money. If you haven't, most of you already know that. You probably wiped out an account or two trying to trade markets that aren't moving, and not only is it frustrating, but it costs you all your money. So focus on the ones that are moving, but also moving with intensity. Mass times velocity. It's just like in football. If you have a guy that weighs 80 pounds running at 10 miles an hour, he could run into you. If you're a big guy, 250, 300 pounds, he won't even budge you. But you get a guy that's 300 pounds running that same speed, he will run you over. Same thing with the markets. You want to find trends that, the majority of the currencies, like today, the Swiss going up, yen going down, and they're doing so with incredible intensity. And so basically markets don't go up or down forever. They tend to go up, and then you have a pullback phase. If the pullback phase is 1/2 or less, in this case you can clearly see incredible strength on the way up, very little weakness on the way down, that previous momentum continues. And underneath that we have the daily trend, take that back. Underneath that we have the 15-minute trend, hourly trend, daily, weekly, monthly. So the more time frames that are up, the higher the odds of the trend resuming when you see this pattern. Now, some days you have currencies like with the dollar that is showing weakness today. The 15-minute trend's down, the hourly trend shifts down, the daily trend shifts down next. The weekly, monthly trend are still up. Some days the weakness continues all day, and other days, what normally happens is when the weekly, monthly trend is up, you might only have an hour to 3 hours of weakness, and then the longer-term weekly and monthly trend reassert themselves, and you have some strength for a couple hours. So be aware that this is a rare situation. Typically, when you have all the time frames are up, you have strength, very little weakness, that strength resumes. That's the highest odds. If you find a weak currency that has that same pattern, like the CAD right here, extreme weakness, very little strength, The 15-minute trends down, the hourly, the daily, weekly, monthly are all down, and they're getting weaker. So we'll start with the euro versus the yen. This is one of the currencies I leave running overnight, so we can use our range chart and see what the real-time statistical strength or weakness looks like, as well as the signals. You have a very strong euro, the 15-minute trend's up, the hourly's up, the daily switches up, the weekly and monthly aren't too weak. So this is a trend that, trading against the weakest one, which is the yen, which really started getting weak at 5:30, you want to look for euro-yen buy. So step 2 of our system is wait for an entry signal. The triangles are trend entry signals. The circles are counter trend signals. And basically, so in this case, you're looking for the euro-yen to buy. Notice the hourly moving average in the middle. This is above the hourly, it's more likely to go up. Underneath the hourly, it's more likely to go down. You can see that same pattern I showed before, extreme strength, followed by very little weakness, a little bit of strength, and slightly less weakness. Buy signal right here. Basically, you want to enter when it goes 1 pip above the bar that has the buy signals high, which would be right here in this case. So 97.09, and there's really only two exits. The next area of support resistance, which in this case is the previous day's high, there's a very big room to run here, and above that we have the weekly pivot. The upper containment bands are good places to take profit target. The white containment band usually is the maximum high of any move. The green band is an extreme day maximum high. Usually price hits this and it falls 20 to 50 pips. But most days the green level never gets hit. Another profit target would be Fibonacci profit target. For instance, if you bought this pullback right here when it went 1 pip above here, you can draw your fibs off the last wave. Control F brings up the fib. You left click, and then when you're done, you let go of your left mouse button. Here's the 1.382 fib target and the 1.618. In my experience, 70–80% of the time, the 1.618 area is the end of the move. So if it stalls at the first fib target, you want to exit half. If it goes to the second area and kind of stalls, you want to exit your second half. Or if it blows right through the first fib target, a lot of times, maybe 20 or 30% of the time, I will hold my position. And if it gets above this level, and if it explodes above this, I'm going to hang on to it. But if it stalls here, like in this case, I'm going to get out when it goes 1 pip below the first red bar's low, which would be right here around 97.89. You can also take a trade and use our trailing stops. So in other words, this buy signal right here, notice the trailing stop is above there, so some of our traders wait for the price to flip with a trailing stop, so they'd actually enter here. That can avoid a lot of unnecessary losses. The downside of that is sometimes instead of getting in this trade here at 97.15, you're getting in this trade at 97.19, which in this case is only 4 pips higher price. 4 pips is a small insurance to avoid a potential loss. And then when you get into the trade, you use a trailing stop to get out, right here at 97.50. One thing to keep in mind with Fibonacci profit targets, the bigger the move, the more likely the fib targets are to work. This move right here was very tiny in comparison to the second one. So the fib targets are less likely to work. You can see the market shoots through the first fib target, shoots through the second one, hits the 2.0 level. This 2.0 level, even on a tinier move like this, probably 70–80% of the time is going to be the maximum profit. Notice the counter trend signal right there. Get out of your trade if you're in there. Doesn't mean that you can't buy the next pullback. The earlier you get into the trend, the more pips you have to run. You might want to trade larger lot sizes near the middle of the range versus by the outer range. Usually at the outer range it has less pips to go. Draw your fibs on here, and this is where you'd be getting out the second trade. Or you could take a trade here, get out with 8 pips, get back in again here when the trailing stop got hit. Let's say right here at 60, out again at 86 for a 26 pip win. Now there also is another buy signal right here, as you can see. Sometimes the market is done going up and it never breaks out through the high. So if you got in this trade right here at 70, you would have got out when the trailing stop got hit at 78. Only an 8 pip win. Again, step 1, use a currency meter. Focus on buying the strongest currencies versus the weak, selling the weakest ones versus the strong. A lot of pairs like the Swiss yen I don't leave running overnight, or the CAD Swiss, so I can't bring these up and show them to you right now with the live only results of our Build Your Own Trend tool. But the euro is weak, and the dollar is the third weakest. It's not the weakest, not the second weakest, it's the third weakest. So buying the euro versus a dollar also makes sense. So we'll go over this as a second example. One other thing to be aware of and an excellent profit target is the Fibonacci areas I draw each night. I spend 30 or 40 minutes every night drawing fibs on weekly, daily, 30-minute, and 240-minute charts. I pick the fib areas I think are most likely to be the maximum high or low the next day and put them on your chart. The light gray areas are Fibonacci retracement areas, and the dark gray areas are Fibonacci profit targets. For instance, so as you can see, this fib area from here to here, this big move from 2350 all the way up to 2450 something, 100 pip move, is where I drew the fibs last night. And that shows the Fibonacci profit target right here, and I add a little bit of padding above and below that level. So instead of you spending 30-40 minutes doing it on all 12 pairs, if you only trade 1 or 2 or 3 pairs, you can certainly do them yourself, but again, why would you do that? Use our currency meter and trade the ones that are really moving. So this is one that you're looking for buys, and if you go back and look at the currency meter, the euro is really strong from 330 pretty much most of the day. The dollar was pretty much weak the whole day, so you could look at all these signals. Usually the market starts trending from 3 o'clock till about noon. So if you bought this buy signal right here, you can see you had a very small loss. You have another buy signal right here, which is you'd be entering this at 24.32. Again, some of our traders wait for the trailing stop to get in, and they would have, therefore got in somewhere around here at 38 versus 32. They paid up 6 pips in price. Trailing stops here, and then you can see it got you out up here at 88. If you got in here somewhere around here, you made close to 50 pips. If you got in right here, you made 56 pips. So again, as the price is going up, there's a lot of ways to get out. You can also draw your fibs off this last wave because it was kind of a slow grind up. First fib target, second fib target. In this case, it went up a little bit beyond that. The bigger the move, the better. And I don't really like slow grinds up like this. I prefer nice spikes down, spikes up, spikes down to draw fibs. So I wouldn't have even drew my fibs on this. Get in this case, get out of the trailing stop. If it stalled here at the weekly pivot or previous day's high, which are resistance areas where there's likely to be selling, you're going to want to exit half. And as soon as it hits the trailing stop, you're out of the second half. In this case, it shot, actually, it kind of stalled a little bit right here. I would have probably exited half with a very small profit, and then on the second half made 10, 20, 30, 40 pips more. You got to play the odds. Then on this pullback right here, the only thing I don't like about this pullback is it has a lot of weakness for a few bars. Pullback like this if it looked like this with very little amount of weakness compared to the massive strength and intensity is a much better trade. But nonetheless, you get into that trade. If you waited for the trailing stop to get in, you're in here somewhere around 81. And notice it stalls up here at my fib target at 98. You made about 18 pips on that trade. So that's how you do it. Step 1, use a currency meter, identify the strongest currencies. Today the euro is very strong, the dollar and yen were very weak. So you're looking to buy the euro dollar and euro yen. Wait for the signal. You can wait for the trailing stop to get hit before you get in. Or what I do most of the time is when it goes 1 pip above the bar's high, I'm in. And then for exits, which is step 3, use support resistance, Fibonacci profit target, or use our trailing stop. If you have a big enough account and you trade enough lots, what I do is I tend to exit half at either support resistance or the Fibonacci profit target, and then I exit the second half at the trailing stop.